Dividend growth investing is amongst the most popular types of investing available, especially because the prospect of receiving truly passive income in the form of dividends is appealing. For many people, the prospect of receiving enough money and dividends to pay most or all of our expenses while also earning enough to live a better lifestyle without being burdened by a job is a matter of luck. The first question that immediately comes to mind is whether it is feasible to live solely off of dividend income. Well, the simple answer is that you can definitely live off of dividend income. What's up guys, welcome back to Glory Investing Show. In our today's video, I'm going to tell you about the fastest way to live off of dividends. However, before we go any further, make sure to subscribe to Glory Investing Show and smash that like button. Now without further ado, let's get into this. And just to let you guys know, if you would like to buy some awesome trading merch, check out our website. There's a ton of different things you can purchase. You can use the code ADDICT at the checkout if you want to receive a discount. First of all, we need to understand what dividends are. Well, let me tell you that when an organization makes a profit, it may either reinvest it in the business or pay it to stockholders of dividends. In truth, many businesses do both. They may reinvest the majority of earnings back into the firm while paying dividends to shareholders with the remainder. Dividends can be received in cash or reinvested to purchase further shares of the firm by shareholders. Of course, if you live off dividends, you would take this money as cash and use it for living costs rather than depending on a source of income, such as a job. Now the question is, what types of investments pay dividends? Well, there are several investments that can pay you dividend income. Some of them include stocks, mutual funds, ETFs, and REITs. We will talk about them one by one. Individual business stocks are the most popular alternative for dividend investors. A stock is sometimes referred to as equity. It is a type of security that symbolizes ownership of a portion of a company. Stock units are referred to as shares. These are often huge, well-established, and well-known corporations with a lengthy history of delivering dividends to shareholders. A mutual fund is a firm that collects money from several people and invests it in financial assets such as stocks, bonds, and short-term loans. The portfolio of the mutual fund is made up of all the mutual fund's investments. Every share reflects an investor's stake in the fund and the revenue it provides. Many mutual funds will pay dividends, which are eventually passed on to shareholders after deducting management expenses. An ETF is a collection of assets whose shares are traded on a stock exchange. They combine characteristics and possible benefits comparable to stocks, mutual funds, or bonds. ETF shares, like equities, are traded each day at varying prices, buyers and sellers. ETFs, like mutual funds, incorporate dividend-paying equities and distribute those dividends to shareholders. REITs enable investors to invest in real estate without owning or managing property. Investment in REITs is also a wonderful method to generate dividends. Real estate crowdfunding and REITs are also reasonable alternatives. For instance, offers a supplemental income strategy for investors seeking stable yearly income while generating a respectable rate of return. With that being said, let's talk about the fastest way to live off of dividend income. Let's imagine you're 35 years old and you've decided to become a dividend growth investor. You decided to invest $10,000 from your savings account in one of the most prominent dividend growth companies on the market. For the past 58 years, Johnson & Johnson has regularly increased its dividend amount in line with its stock price gain. You only get $1.01 per share per quarter, which works out to just over 33 cents per month for each share of Johnson & Johnson. The firm also boosts its dividends every year, thus as long as the company does not go bankrupt, the dividend will be raised every year. According to Growth Rate Calculator, Johnson & Johnson stock has an annual dividend growth rate of about 6.13%, which will enable us to predict how often our payouts will rise. If you didn't reinvest your dividends in 40 years, you'd have received a paltry $40,138.62. If you decided not to spend a single cent of your dividend income on something you truly desired, such as a new vehicle or a lovely trip, or just paying your bills for 40 years and instead kept buying more and more shares. If you're substantially older, the objective of being able to live off dividends, either partially or entirely, for your income is becoming increasingly difficult. Many dividend investors eventually quit investing in dividend growth stocks because they realize that their ideal of living entirely on dividends won't be realized until they're gray-haired and basically done with their life. Being a dividend growth investor is not for everyone, unless you have millions of dollars saved up. I'm confident that the greatest investment that satisfies those criteria is called ETF. These are a newer form of investments that hasn't yet become common, but they're a great resource for dividends. They're avoiding stocks and funds that are continuously diminishing their split dividends or investing in extremely risky enterprises. I'm not the type of individual who wishes to save as much as possible and afterwards die without having had an opportunity to enjoy it. The most well-known covered call ETF is QYLD, which currently has a dividend yield of 11.49% and pays dividends monthly rather than quarterly. Covered call ETFs employ a covered call trading strategy in which the fund purchases a basket of companies in the Nasdaq 100 and then sells call options on those equities. Those options are then sold on a monthly basis, and the option premiums gained are distributed to shareholders in the form of dividends. Another outstanding alternative is ticker symbol NUSI, which sells put options in addition to buying call options on its assets. This implies that on days when the Nasdaq 100, whereby this ETF replicates, declines, the share price of NUSI will not decline drastically. This ETF, however, has a significantly smaller dividend yield of 7.88%, and as you can see, it was only created in 2019. Here's another great sort of investment which pays higher returns to investors: BDCs, or corporate development organizations. They've been around since 1980 and are basically companies that provide financing to small and medium-sized businesses in order to help them grow. In exchange for receiving financing, these small businesses must pay a certain percentage of their profits to the BDC, and then the BDC must pay 90% of the money they earn to stockholders as legally required. It is very common for BDCs to have dividend yields of over 8%. Some make payments monthly, but the majority pay quarterly, which isn't bad if it's still paying huge dividends. These are two stocks in the BDC sector that really stand out to me. One is Ares Capital, and ticker symbol is ARC, which is the largest business development company out there. This one has a massive dividend yield of 8.18%. Newtek, ticker symbol NEWT, is another one I like. I primarily cover such types of higher yielding investments for people who enjoy this method of investing. The simple truth is that if you want to live off your dividends much early in your life, make sure to target specific alternative lesser known types of highly paid investments, reinvest those dividends as much as possible to build up your dividend portfolio way faster, or spend your dividends in some months such as on a great trip and choose to reinvest. I don't know what you think, but if I logged into my brokerage account and saw that Johnson & Johnson paid me $20, I wouldn't be as motivated to keep it up as if I saw QYLD paying me $102 every month. There's certainly a powerful factor to dividend investing this way. Well, that's all for today's video, and thanks for watching it. If you liked it, make sure you give it a thumbs up and share it with your friends. Also, don't forget to share your thoughts and valuable feedback with us in the comment section below. And lastly, if you have not already subscribed to Glory Investing Show, subscribe to it and press that bell button so you'll be notified each time we upload an interesting video on this channel. And while you're here, click to watch one of these two videos that are appearing on your screen. We'll see you there. Take care, stay tuned.